Hi, I'm Maddie Kresovic.
Hi, I'm Evan Jordan. This is our multinational corporation and American Depository Receipt Finance 447 project.
So, our first company was an ADR, Teva Pharmaceuticals. They are the world's leading power of generic pharmaceuticals, and their medicines help patients and consumers in a way that few other companies can. They produce 120 billion tablets and capsules a year in 87 pharmaceutical and API facilities around the world. Teva has a leadership position, top 3 in 40 markets around the world. The scale and broadness of their generics portfolio has a big impact on global healthcare. Their headquarters are in Israel, and they share trades on both the New York Stock Exchange and the Tel Aviv Stock Exchange. The company is a member of the Pharmaceutical Research and Manufacturers of America.
Now we're going to take a look at Teva performance compared to the TA35. Starting off the year in 2018, Teva had a higher price than they do now. They hit their highest price in mid-January at a price of $22. Their lowest stock price was $16.84 in the beginning of April. They still sit around that at the end of the quarter, and the overall change in the stock price is traded in the United States was negative 10.07%. The TA index is an Israeli stock market index computed by the Tel Aviv Stock Exchange that lists the largest 35 companies in the TA 125 index. The index was expanded on February 12, 2017 to include 35 instead of 25 stocks in an attempt to improve the stability and therefore reduce the risk for trackers and encourage foreign investment. Next, we'll take a look at the TA35 versus the Teva. The comparison graph shows that Teva moves down along with the TA35, but it is way higher than it throughout the quarter. This tells us that Tel Aviv market does not have a big influence on the performance of Teva. However, we can see that the downward slope happens from both of them, with Teva at negative 12% and TA35 at negative 7%. Teva Pharmaceutical Industry stock was down last year and is down again this past quarter, but it is not necessarily related to the market, and we think this is because the Van Eck Vectors Pharmaceutical ETF is down 25% since then as well. Teva stock has had additional problems facing slow growth in its generic business, the sudden departure of one executive, and the outing of its CEO and mounting debt. This leads us to ask if Teva stock faces substantial risk or if its market's overreacting and mispricing Teva Pharmaceuticals. We believe that Teva stock isn't undervalued since the company faces substantial risks going forward.
As an ADR and internationally investing and business conducting company, Teva is at a major currency exchange risk. In its most recent annual report of exchange rate differences, including the impact of Venezuela between this year and last, negatively impacted their revenues by $914 million, the GAAP operating income by $290 million, and non-GAAP operating income by $335 million. Adjustments to the exchange rates used for the Venezuelan bolivar and the November 2017 deconsolidation of its subsidiaries in Venezuela resulted in a decrease of $1,062 million in revenue, a decrease of $249 million in GAAP operating income, and a decrease of $323 million in non-GAAP operating income compared to the results last year. In light of the political and economic conditions in Venezuela, they excluded changes in revenues and operating profit in Venezuela from any discussion of local currency results.
The bolivar has appreciated relative to the Israeli shekel this quarter. It started at 2.875 and ended at 2.82, so not much overall change, but it leads to decrease in profits. What else are we doing?
Overall, Teva Pharmaceutical Industries has made a 64% jump from a 12-month low price of $10.85. It was seen 0.91% higher, changing the price to $17.83. At recent session, the prices were hovering between $17.52 and $17.97. This company's shares are 8.41% off its target price of $19.33, and the current market capitalization stands at $17.38 billion. The stock witnessed a negative 16.41% decline for this 3-month period. To measure price variation, we found Teva's volatility during a week of 3.47%, and during a month it has been found around 2.94%. Next, we're going to talk about Apple, which is the MNC that we picked. They are an American multinational technology company headquartered in California that designs, develops, and sells consumer electronics, computer software, and online services. Apple was founded by Steve Jobs in 1976. It operates through many geographical segments, including America, Europe, Greater China, Japan, and the rest of Asia Pacific. Apple trades on the NASDAQ.
So Apple stock started off the first quarter with a price per share at $170.16. At the end, the price dropped to $167.64 per share, which is equal to an overall price change of negative 1.48%. An average daily change of the stock price was negative 0.01%. Although the price did not fluctuate a huge range, it showed most of its volatility during the middle of the quarter, dropping to a low at $154.83 per share, rising to a high at $182.59 per share, then falling back down to close to where it is at around at the end. Was Apple moving relatively parallel to the NASDAQ, or were the company's specific factors that influenced the price per share? Let's see. The NASDAQ 100, which Apple is a component of, showed a similar movement throughout the quarter, reaching its low at February 8th. The overall change in the NASDAQ was negative 0.48%. The comparison charts indicate that Apple might have moved in the same directions as the NASDAQ. Next, we're going to look at Apple versus the NASDAQ. Apple is a major currency exchange risk. As they are conducting business internationally, Apple stock fluctuations may have been influenced by the appreciations and depreciations of foreign currencies that is exposed to. Apple CFO Lucas Maestri said that $230.2 billion of its cash, 94% of it, was being held overseas. Apple primarily uses foreign exchange derivatives to hedge its exposures, but at times it has been forced to raise prices when currency fluctuations prove to be greater than expected. This is particularly true for the Chinese yuan, since the US dollar continues to rise against the yen. And Apple Greater China segment is now 25% of the total revenue on a trailing 12-month basis.
The fundamental purpose of derivatives is to mitigate risk associated with volatility by transferring that risk. Forecasting is already hard enough, but increased volatility just makes it that much harder. So even as Apple continues to expand its hedging strategies, this task is only going to become more difficult, since currency volatility will likely continue to rise. Global markets are freaking out largely because of China, and the yuan is expected to be volatile throughout the year. That being said, China's central bank has said that it will try to mitigate and limit volatility in the yuan as best as it can, but the yuan still looks like it will remain weak this year. Another big area for Apple's sales is in South America. Throughout the quarter, the dollar depreciated a major amount relatively to the bolivar. This should have caused an increase in Apple's currency exchange expense and therefore should have made them less profitable in this quarter. Apple doesn't go raising prices on European consumers just because the euro has fallen. Instead, Apple takes the hit on its balance sheet in the form of reduced revenue and margins, and potentially earnings. Only when things get crazy, as they did in Russia, where the ruble has lost half its value against the dollar in just 6 months, does the company adjust pricing without rolling out a new product or a new upgrade cycle. Apple adjusts to local pricing at the time of new product launches. Since the euro appreciated during the quarter, this would increase the expenses when transferred to the US, and with a depreciating euro, Apple's stock price might rise.
As indicated by the graph you're looking at now, the South African rand was appreciated in the value comparison to the US dollar. A weaker dollar means that Apple is now making more money in dollars in a variety of territories at its current prices. It also holds the potential for Apple to lower its prices on hardware and apps overseas, a move that could be expected to induce demand. More favorable exchange rates could help to boost its ability to earn more.
The hedging program of Apple may not fully offset their risk for currency change fluctuations, but it makes us confident to say that the impact of the most recent currency value changes only have a minor impact, if any, on Apple's price per share. The company's stock fall this quarter, which came amid a broader market sell-off, pushed Apple into correction territory. That means the stock was down more than 10% from its most recent high, which was reached last quarter. Apple posted record sales of $88 billion for the final 3 months of 2017, fueled in part by the higher price tag of the iPhone X, which went on sale during the quarter. However, the total number of iPhones sold during the quarter declined 1% from the same period a year earlier. The weaker sales forecast and slight dip in iPhones sold fuel lingering investor concerns about demand for Apple's current iPhone lineup, including the $999 iPhone X model and the more affordable iPhone 8 and 8 Plus.
We want to thank you for watching our video, Dr. Lewis. That's it.